Hello, traders. It's Thursday, March 23rd. We're about an hour and 45 minutes into trading. Let's take a look at the last pick. I did a video Sunday night. It was ahead of the FOMC statement yesterday, so I didn't know what the market would be doing. We've seen lots of two-sided action. That's why I gave you a bullish pick and a bearish pick. We are in day trading mode. We're taking advantage of some of these large intraday ranges. I told you what to look for. PTON was the short that I highlighted Sunday evening. And you can see how the stock was down and weak relative to the market Monday morning. And then the bottom fell out. Actually, a very nice trade. Stock fell from about $9.80 down to about $9.10. So really a decent move. And that relative weakness was what you wanted to be watching for, along with heavy volume. That is the key ingredient right now. So if we take a look at the daily chart, you can see that the stock has remained relatively weak. The other pick that I had for you was a long AMD. So let's bring that chart up. You can see that AMD has actually performed beautifully the last couple of days. Back in here, Monday, Tuesday, stock was a little bit overextended and it needed a day of rest or two. And that's also something that I'd mentioned to you, was that we wanted to see the high from Friday breached with vigor, heavy volume. Then we would know that it was time for us to take that position. We didn't see that. In fact, on Monday when we came in, when the market did show some signs of strength, the stock was still pulling back. And this is the price action on the 20th. You can see it gap down. Okay, well, there's no reason for me to take a long position in this. I need to see that relative strength. I don't like trading stocks on the long side if they can't even get through the prior day's high. And in this case, it was not able to. It did rebound, and it started to finally show some decent strength later in the week, but it needed time to digest recent gains. So it wasn't until really yesterday that the stock started to wake up. And there we could see on the open, we had these long green candles ahead of the FOMC statement. And then, yes, we started to get this really nice relative strength on heavy volume. So, yeah, this is a really nice long. It's been a nice long today as well. We had the drop after the FOMC statement yesterday. This morning, the market gapped higher, and you can see how the stock is continuing to move higher on relative strength. Not great volume, though. So let's shift gears and take a look at what the market is doing. I believe we are setting up for a nice little short right here. You can see this was the FOMC statement yesterday. Look at that giant candle, that initial reaction. This bar was a big tell. You could see how the market was starting to lift off, and then it finished with a bearish hammer. This tells you that there is selling pressure. We are not just going to be off to the races. Lots of mixed candles in here, back and forth, heavy volume. Okay, well, now they're waiting for the press conference. Always important to wait for that press conference if you're going to trade the number. And as soon as Powell started to speak, we could see that, yes, now we're starting to see some long red key bars stacked, little bounce, and then the bottom falls out. The major moving averages, the 200-day and the 100-day moving average, they are congesting in the same area. And you can see how if we move through one moving average, we're probably going to move through the other one. Yesterday, after the FOMC statement, we broke the 100-day, and then within an hour, we broke the 200-day moving average and we closed below it. Today, we gapped above the 200-day and above the 100-day. So now we're back and forth around these major moving averages with frequency. They really don't mean that much. Intraday, sure, we can lean on these for support and resistance. In general, you look at the overall chart of the market and you see lots of long green candles, lots of long red candles. The net change for the market, we're pretty much where we were a few weeks ago. I'm expecting similar. Buyers and sellers are really paired off right now. And we're seeing heavy volume, big intraday ranges. That's great for day trading. That's where our focus should remain. Longer term swing trades that span 3 or 4 weeks, very difficult in this environment because we have new information. And that was the SIVB bank failure from 3 weeks ago. Everything changed when that happened. And we did hear the Fed reference it in their statement yesterday. They still don't know the full effects of the banking crisis. That statement was pretty dang hawkish yesterday, and that's been consistent with what the Fed has been over the course of the last year. So there are many takeaways from that statement. Don't expect any pauses this year. We're still leaving the door open for a possible rate hike in May. Inflation is still hotter than we had expected. We believe that credit conditions are tightening and that could weigh on economic activity. We don't know if a soft landing is still possible. These are all hawkish, bearish signs for the market. Plus, they didn't even reference their balance sheet roll off, which means they're continuing to roll off their balance sheet, which is a form of tightening. I view all this information as neutral to slightly bearish. And I say that because if there is another credit situation, it's going to surface in the next 2 or 3 months. So this is a holding period. Right now, the S&P 500 is trading at a forward PE of 18. That's pretty lofty. That's pretty rich. There's no reason for asset managers to rush in, given the FOMC statement yesterday, fairly rich valuations, and the fact that we don't know if there could be more to the credit crisis than we've seen so far. So I think the bid's going to be fairly passive, and we're going to continue to see this type of chopping around. So focusing on day trading is the way to go. Some overnight shorts obviously will work well also. So here's the first kink in the armor that we're seeing today. And you can see the heavy selling pressure yesterday. Then we gap up. And now we've got these tiny little bodied candles. Well, that suggests that there is some selling pressure. There is some resistance. If there weren't, we would see long green candle, long green candle, long green candle stacked on heavy volume. But we didn't see heavy volume. These are tiny little candles. This is a tiny little move higher. There's not a lot of conviction here. We have a 1OP cross. We want to make sure that this blue dotted line flattens out before we consider that bearish cross to be valid. We had a little bit of a poke through right here, but that blue dotted line was still rising. This is a decent bearish cross. We're above the major moving averages. We have to respect that. That's going to attract some buyers. There is some support for the market because of that. So we've had a nice grind higher. We need to see confirmation that this is a resistance level. So we already have a bearish hammer off of the high of the day. That's good. Then we had a little follow through with another red candle here. This is not enough for us yet. Yes, we've got this cross right here. What we would like to see is maybe another bearish hammer. Why are those so important? Because when they're forming, they are long green candles to a new high of the day. That attracts lots of buyers. Everything looks great. Hey, this is going to be the next leg higher. But by the time that candle finishes, the sellers come in and they drive the price down, and it turns into a bearish hammer. That tells us that resistance is forming. So I would be looking for a double top, lower high, or some wicks up here to tell me that yes, we finally hit resistance. We should be hitting resistance. This is a wimpy little bounce. This is not aggressive buying. No volume here. So when the market reaches one extreme or the other, and the price action and the momentum wane in that direction, we can expect reversals. Why? Because that's what we've been seeing for the last 3 weeks. As soon as one side runs out of gas, the other side comes in and starts driving the market. So that's what we're going to be looking for here. And I've got a couple of shorts that I will show you, and we'll get to those right away. These are stocks that I've highlighted this morning. Chewy, I like. That is very nice. You can see how the stock just made a new low of the day when the market was doing what? Still going higher. That is a sign of aggressive selling pressure. So let's put up that daily chart and see what's got me excited about this stock. We're going to zoom out to get those trend lines to line up properly. And you can see these are some major trend lines that are coming into play right in this level here. And when we break through these levels, we don't want to poke at them. We want to blow through them with a long red candle. Until then, we have to assume that this is a very sticky price point where support is more likely to hold than to fail. But when it does fail, that tells us, look out below. I like Chewy. This is a post earnings. You can see the A, earnings after the close yesterday. This is a post earnings reaction. Fell below the 200-day moving average. It's below all the major moving averages. Chewy is going to be a really nice short today, and you can see it has relative weakness. So let's zoom in to take a look at the price action right here, and then you can see that big breakdown. And the stock is pretty close to the low of the day when the market's been moving higher. So as soon as the market rolls over, you're going to see another leg of Chewy moving lower. So, I like this. I want a short in here because we're finally getting this cross that we want for 1OP. But instead of shorting the S&P 500 on a light volume day like this, my better play is to find a stock that has relative weakness, that has major technical breakdowns, that has heavy volume. That way, if I short a stock like Chewy and I'm wrong and doink, next leg higher, SPY, Chewy is going to have a hard time getting off the deck. I'll be able to take a small loss. Maybe I'll even make money on it because the stock is so weak relative to the market. That's the edge that we trade. Now this is turning into a decent little red candle here, and we're starting to see some signs of selling pressure. So let's take a look and see if we can find a couple of others. I know I had a few others that I highlighted earlier in the chat room today, and so I'm just going to go right to those charts so I can keep this video relatively short. GPC is another one that I like. So let's zoom out here and get a glimpse of that long-term trend line right there, coming up through these points, breached with a long red candle below the 200-day moving average. And you can see it had a little bit of a bounce this morning. So let's zoom in. There's your little bounce. Heavy selling, stacked red candles on heavy volume, major D1 technical breakdown. Yes, this is what we want to see. So before the market started to really roll over, it was starting to show some signs of resistance here. You got this stock cracking down pretty hard. So yes, I believe GPC is going to be a nice trade. Could even be a nice little overnight swing, provided that you get that market drift lower. And now, obviously, we have to watch where those 100-day and 200-day moving averages are coming into play. The 100-day is the opening from today, so that will be your first level of support. Actually, we'll put up the VWAP because that will be the first level of support. So we'll overlay that so you can see where that comes into play. And that's the first support level that you'll see right in there. So we can expect a pullback at least to that level. Personally, what I'd rather see is I'd rather see a little more time here, a nice attempt at the high here, and then another bearish hammer and a bearish engulf. That double top lower high would give me greater confidence, and then I believe that we could see some downward momentum build pretty quickly. So let's see if we get it. Let's keep taking a look for a couple of other stocks. SQ was a stock that came up. That stock has been pounded this morning. That is very weak on a daily chart, and you can see the major technical breakdowns that have happened. Longer term uptrend lines breached to the downside, 100-day moving average fails. This is news related, so you have to make sure that you know what the news is. Here you've got a downward sloping low minus, and that pretty much has provided resistance for the stock this morning. But this is not the type of stock that you would want to come in early on and try to short when you see this. This tells you that this was an overreaction and that the stock has lots of buyers coming in on heavy, heavy volume. So you want to make sure that these guys are deterred, that they are not in there fueling the next rally and filling in more of the gap. More than half of it has been preserved. That's important. So if we start getting past the halfway point, that tells us that this move was probably just a gigantic overreaction to whatever news there was. So here I would be looking for multiple attempts at that high to try and get through, and then I want to see it crack down and I want to see that relative weakness. Then I think SQ could set up for a nice little short. But we need to see that weakness because then that will confirm, it'll legitimize this breakdown, and then we'll continue to see follow through over the course of the next few days. So yeah, I like that. I think that sets up for a nice short. I'll show you a long that came up really early on our searches this morning. It was Netflix, and we'll take a look at that. This one right out of the gate was very, very nice. And you can see multiple support here. This is a long-term uptrend line. Let me draw that in properly by zooming out. That was a support level that was established. Now we have our trend line here. You can see how yesterday came and it tested that trend line, but it bounced right off of it. And this morning it opened higher and it easily took out that 100-day moving average. So let's take a look at the price action. It needed to do that. If it couldn't get through that 100-day moving average, then we would have no interest because that was going to represent resistance. But 3 stacked long green candles through the 100-day moving average on massive volume. Yes, that was a nice little long to start the day. And we had a decent market backdrop with a bullish 1OP cross. So, all right, trading alongside. Now we're starting to see signs of resistance. We know this is a wimpy bounce because we have mixed overlapping candles. We have tiny bodied candles. We have very light volume. We've seen two-sided action over the course of the last few weeks. No reason to think that sellers are just going to go away. So now we're watching for this bounce to run out of steam, and we're looking for shorts that we can take advantage of. I believe that CHWY is going to set up really well. And let's see if we can find maybe one more. I'm just going to go down the list and see. The banks are obviously weak. We've had some weakness also in the energy sector. Not what I would be looking for there. I am just going to scan through this list, but I've got really the two that I want to highlight. So I'm going to cut the video short and just say that I like CHWY on the short side today. On the long side, I like Netflix. I think that sets up well. And you can see that AMD was also still relatively strong, but Netflix will be your pick of the day on the long side. And CHWY on the short side. Over the course of the next few days, I'll do a video Sunday night, but over the course of the next 3 days, you just have to watch for those intraday moves, join them, go with the flow, have a nice long picked out that you can trade. Once you start seeing signs of resistance, that move has run out of gas, you're likely to see a reversal, shift gears, look for those stocks with relative weakness, wait for that drop, wait for support on that drop, shift gears. That's how we're trading the market currently. Thanks so much. Please leave your comments. We'll see you Sunday night.